Good morning, friends. So, to start off this video, okay, my apologies. To start off this video, we're going to look at the dollar. If you can see, last week, this is the daily. We formed this daily fair value gap. And my interest, what I was looking at was to see how we respected it. And I liked how on Friday we closed this candle body. We came down and wicked, but then the body closed above it. And again, just normal fair value gap theory is we want to see the bodies respect it. And if the body can't even close inside of it, that means it's very strong. But we opened up today, and you could see us drop back down to this fair value gap. I know ICT himself, he will be live streaming today at 11. Very excited for that. I feel like it's been a while since that's happened. But he said himself that he's waiting for a daily candle to close in the upper portion of this weekly wick. So he himself has said once a daily candle closes in the upper portion, specifically the upper quarter of this wick, then this high will be taken and we'll look for upside. So I think he'll probably reiterate that. We're kind of sideways right now. This week is a very interesting week, so I think you should all be very cautious. I'm expecting some sideways price action because the Fed's, is it the Fed fund rate? Yeah, the Fed funds rate comes out on Wednesday, which means there'll be an FOMC press conference on Wednesday. And then we have non-farm payroll on Friday. So it's a very, very high impact week. We have high impact events on Tuesday. That's just like consumer confidence, other stuff. But there's a red folder event every day except for Monday today. But I still expect price action to be kind of held until Wednesday in the Fed's funds rate. I'm going to show you another example in a moment on why today or this week just could be a very sketchy week to trade. So again, just to reiterate, ICT himself explained he wants to see a daily candle close in the upper quarter of this weekly wick to go down onto the daily. You can see we're just in this sideways price action. So I like that we took this sell side and then came up very quickly. But to be honest, I wanted to see this buy side ran a little faster than it has been. So I'm kind of at the point now, and especially after getting this high taken and just wicked above, I'm at the point now where I think for the dollar, it's in an area where it's like you have to wait, and that's fine. I think that needs to be normalized in trading a lot more. Just saying I don't know, like we have to wait and find out, because what's going to happen and when the way you lose money and the way you blow accounts is when you're in conditions like this where it's not clear and you don't wait. It doesn't mean that there aren't people that can't find trades, and it doesn't mean that you can't get lucky, or that you might not even, doesn't mean that you're not going to see your setup and it won't execute. But it's just, know yourself, know where you're at in your trading, and identify when it's a time when it's like, I need more information. So for me personally, this is a time I am still waiting for this buy side. And I think, as long as we don't start closing at the bottom of this fair value gap, and I think that will start making me like the mean threshold of this order block right here. Then I'll start being like, I don't think we're seeing upside. But again, so we took the sell side here. This wick took buy side. We just need more data. Now going over to ES and NASDAQ. So last week we reached our weekly objective on ES and on NASDAQ. You can see it's this weekly fair value gap. That's another reason why it's a good week to wait for more data. I think, we had a decent run down. I could see a retracement, especially on the daily, since we came down to this weekly fair value gap, and we came through the consequent encroachment, but our candle body respected it. So I could see us kind of retracing up into some of these inefficiencies, unless, some really dire news comes out, like, I don't know, what's happening over in the Middle East seems to be getting worse, and for some reason, I feel like there hasn't been like a sudden drop in the market. When you look at the daily, we have actually, we dropped a lot, but this has been kind of like a gradual drop. If you look at the price action throughout these days, nothing's been super sudden that would have made you think like something just happened. But we read the candlesticks, so let's just keep reading the candlesticks. We've reached a higher time frame weekly objective, closed at the consequent encroachment. We have a lot of inefficiencies up here. We have a high impact news week. One thing I want to point out, so going to the hourly. So we had a few new day opening gaps last week. We had this one, we had this one. And ICT himself said he doesn't keep them on usually. It's like a 5-day thing. Like he keeps them on for that week. So we are in a new week. I'm keeping them on just because, and I think this is something he would say. He hasn't said this verbatim, but these are levels, and I wouldn't be surprised. Like just like he said, he gave a time frame. I think it was like 5. He keeps like the last 5 new week opening gaps are the most relevant to him, but he's made comments where he said, it can go and react off a new week opening gap from 20 weeks ago. So I'm keeping these levels here just because we're so close to them, and they are still, they were Thursday and Friday. What I want to draw your attention to is specifically, so this new week opening gap on ES, you can see we gapped up. I'm going to open up NASDAQ. So NASDAQ also gapped up. You can see NASDAQ in the bottom corner here. But what I want to draw your attention to is this low that was made on Friday afternoon. If you see on ES, we go low, high, lower low, lower high, kind of arch over and make a lower low. This is a lower low than this one. On NASDAQ, it's low, high, lower low. We arch over, and then it doesn't make that lower low right here. It's a higher low compared to this one. So right there, you could, we could say on the higher time frame, like the 1 hour and the 4 hour, this could be a little bit of a SMT divergence, but versus like an actual decoupling of the two. But I just want to be, it's something where, especially on Mondays, you don't know exactly how the week is going to shape up. I'm just going to be extremely, extremely cautious. I'm also going to be extremely, extremely cautious, and I'm going to show you a little snippet from my trading journal. So this week is the Fed funds rate, FOMC, is our high impact news. I looked back at last month and how I traded the Monday before last month's FOMC, and I'm going to show you that trade. So this is that trading day. I actually didn't end up filling out the journal for that day because it was a very bad day. It wasn't a very bad day, but it was a loss that I wasn't happy with. So that's not good. I don't suggest that. You should. It's probably more important to fill out your journals on days that you take losses. This was a day that would have definitely constituted a journal entry, and I just didn't do it that day. But what I want to draw your attention to, and I know it might be hard to see. I'm sorry, this is just a screenshot. So these were trades taken. These trades were taken on this channel. So these were live streamed if you go back to 9/18. Notice the same divergence in ES and NASDAQ that happened that Monday. So we were trading ES and we had the draw on liquidity correct. We were trying to target, if you see on the 5-minute, we were trying to target this upside because we just took this sell side. I saw this SMT, so ES made a lower low. Well, no, sorry, not that I saw this SMT. Coming into the 10 o'clock hour, what was it? Okay, so I was trying to trade a Model 22. So you can see when we came up and made this higher high relative to this, I was expecting us to react off this fair value gap right here for a Model 2022 entry. So on the 15-minute and the 5-minute, we took sell side liquidity. We came into the opening range gap. We showed a large we saw displacement to the upside, broke market structure shift. I was expecting a 2022 model. What really happened was it ran through and took out sell stops one more time. You can see this SMT, this raid on sell stops didn't happen on NASDAQ. That fair value gap that we tried to go long on ES actually delivered on NASDAQ. You can see it right here. And then on ES, what happened was they ran stops again, which, you know, that happens. It's one of those things where the market's hard. We take losses. That's why you use a stop loss, even though you could argue if I didn't use a stop loss, it would have won in the favor, but that's not something you should argue. That's not smart. So you can see it came up, and then I bought again here, right here, using this as an inversion, and I forget what happened. This is why you should journal. I believe it looks like I didn't take 5 handles, so that's why I said we'd take our first 5 handles. I didn't take that. It came back and stopped us out again. And then it came down to here. It kind of disregarded this fair value gap again and went higher, but you can see on NASDAQ, it just delivered to that original fair value gap that delivered. So I say that to say this was one of my larger losing days, and this was the Monday before the Fed funds rate FOMC. We had this divergence where this same setup played out in NASDAQ. We got stopped out in ES. I say all that to just kind of bring you back to the fact that this is an example of, it was probably a low probability condition day. And then I want to talk just to kind of, give that some context to, now we have this higher time frame divergence in NASDAQ and in NQ. So that's something that we should be noting. And it's the end of the month. When I was looking back in my journal, my win rate in terms of days for the month of October was really good. It was 83%, which I plan on making a video comparing my October and my September, because September wasn't a good month. October was. I'm going to do a video comparing those two things, post it on the channel. But I have a good win rate right now, and we're up nicely for the month of October. So why, if there's 2 days left. Let's close the month strong, just put the flag, draw the line in the sand. I don't have to trade today. Close out the month strong. And then, yeah. So I'm saying all of that stuff just to say, like, it's know when not to trade. This is a time today and tomorrow, and then this whole week, actually, because on non-farm payroll weeks, according to ICT, we should trade Monday, Tuesday, and Wednesday morning. So that means we shouldn't trade Thursday, Friday. But if I also just gave you an example of why, like, I don't really want to trade Monday, Tuesday. So that could mean like Wednesday morning is the only day that I should theoretically trade, or I theoretically might want to trade. But I think, yeah, it's just the more that I've the more selective I've been with my trading, the more consistency I've found. And it's just really breaking away from that need to have to trade every day. Okay, so I'll go and kind of do a quick breakdown of the individuals. So this is where we closed last week. We're opening today with the new week opening gap up higher. Levels I'll be watching are, we have this weekly wick consequent encroachment from way back here. I'd watch the consequent encroachment of this wick. They're pretty similar, so I'm just gonna leave this on. I'd watch the high of this wick, this daily wick, because we do have a fair value gap here. I wouldn't be surprised if we come up and wick into this new day opening gap, top of this fair value gap. I could see, depending on like what Powell says in the Fed funds rate and the FOMC, if we do want to see a lot of volatility, I could see them sending it up into there. I could also see us, if we do kind of move sideways, this is like for the week, I could see us moving sideways and like coming up and even playing with the idea of the bottom of this new week opening gap, this candle wick. So again, it's now that we've reached this weekly higher time frame target, you have to reassess. It's not just downside anymore. Going to the 1 hour. Yeah, again, so I could see this new day opening gap. It's not too far away. Being toyed with this week, maybe not today. We have some really smooth highs here. So kind of closed that trading day, came down, gapped up, and then we just have these smooth highs. So that's another reason why I think price could send it up there. You can see on the 15-minute, these candles respecting that previous new day opening gap. So again, that's why I have them on here. Is that the new day opening gap for Thursday? Or is it Friday? Thursday. So you can see the candles here, and they're all respecting it. That's one of the reasons why I'd keep it on there. NASDAQ. So on both the indices, we are above our new week opening gap. NASDAQ, I think it doesn't have those smooth highs. You can see here, those were those highs that I was talking about. And even last week we had, I think I spoke about this a lot on I think it was Friday. NASDAQ and ES were just like completely doing different things. So NASDAQ came up and ran all those London highs, whereas ES that morning didn't. It just left them there. So remember, we kind of have two different narratives playing out right now. I could see upside for ES just because this looks so smooth. It doesn't look that smooth on NASDAQ. Whereas I could see NASDAQ upside doesn't look as probable to NASDAQ. But again, they'll probably move in the general same direction. So definitely not A+ conditions. Just know that. We also have just a huge opening range gap. Gonna look at NASDAQ, see how it's opening. Yeah, just again look at these difference between these highs and lows. So ES makes this low at around 850 and just kind of works its way up. NASDAQ makes that low, takes it once, takes it twice before going higher. So I mean, you can see that they're going in the general direction. They're both going higher, but look at the divergence in these highs and lows. If you were, and just think about it in terms of like if you were to be placing a stop loss somewhere, like, and you're using a low or a level, it's in conditions right now where it can come and it'll run you out when you think it shouldn't. But then they're both going up, you know. Hmm. Yeah, and if you look at ES last Friday was a decent sized down close candle. And then you look at NASDAQ last Friday was an up close candle. So definitely a time to wait. We have the consumer confidence at 10. So we had another high impact news at 8:30. So we had 8:30, 10. I wouldn't try and trade before 10, me personally. And today is probably going to be one of those days where, if I do take a trade, it's going to be something that like has to be blatantly obvious. So next level after that consequent encroachment, we have the bottom. We have the daily fair value gap. I would be interested to see how we treat the bottom of it. Does it start to kind of wick? Is it going to show a willingness to really want to get up to the upper portion of this new day opening gap? And one thing too, I know when I first started trading, it was pretty easy when you see an open like this to kind of feel. I used to feel emotional when I would see an open like this. You'd feel like it was moving without you. You'd like feel like you should be in it. But again, there's no need to feel like that because there's not even an entry model in here. So I think the only way you could have entered here is if you were like doing some kind of breakout model. So we have this fair value gap. Again, I'm not even really going to play with the idea of using this as an entry because this doesn't fit any of our trading models. And one thing that I'll talk about in that video where I'm comparing my October and my September is how the way I used to trade before I decided to, stick to a model and do the same model every day is if you're not trying to enter on the same model every single day, at least in the beginning of your trading journey, then it's hard to measure consistency, because whether this does or doesn't work out, it's like, how do you compare past examples of where some like price did the exact same thing? And then there are times where, say if you do get it and you do, get a winning trade off of this, how do you know if you're getting lucky or not if you're not measuring the same entry or same trading model over and over and over again? So for ES, I'm expecting it to get up there, take these smooth highs. So again, just to reiterate, if you're watching, today's a day where I don't have too much of an idea of what is going to happen. So a lot of when that does happen, it's going to be a lot of me just silently watching. There are days, and I've recorded that on this channel, where there might be very clear pools of liquidity and we have a clear draw, and I'm going to say, I want to see us, go up into here, do this, then end up going in this direction. Today's not one of those days. It's a day where I'm still trying to figure out where the market wants to go, which will mean I will probably be silent a lot. I'm also really hungry. I didn't eat breakfast before this, and when I get hungry, I just get quiet. I get silent hangry. But and I probably won't take a trade either. So I feel like I've said that a lot, and then I've ended up taking trades. Something, okay, what would need to happen for me to take a trade? I don't know. Probably not a lot. It's hard when you have these run-ups like this because there's not a lot of like swing highs and swing lows to like build a narrative off of. I think it's going to go up here. I'd be interested to see if it reacts off this level and goes lower, or if it continues to cut up into this new day opening gap. If it did show like a real intention to want to go higher into this gap, I feel like you could use this right here, this up close candle. I would use that as a breaker. And what I would want to see is come 10 o'clock, I'd want to see some kind of like big fair value gap form, ideally right at the top of it. So when we enter back into the fair value gap, we're playing a silver bullet with a breaker under us. That breaker is from this low high, lower low. We go to the upside. It's like an upside scenario I could see. Downside, I guess downside's kind of hard. Downside's hard to frame out because we don't, we're gonna have to form a swing low on this 5 minute. And that's why I said it's hard when you have these straight run-ups, because when there's no swing lows or swing highs. So think about it. For us to get from this black box to this black box, there are scenarios where it could go straight up. And if it is going straight up without even forming a swing low, you're probably not going to have an entry. I would call that chasing price. If we do make a swing low, like go up, come down, and go up, it's just a swing low on a sense. Like there's no way to tell whether it's a swing low to go higher, or if it's we're actually just making, what we did was we just made a swing high that's really a reversal that's going down. I hope that made sense. So the downside is a little harder to frame out right now. I think we have a better upside narrative, and when it is harder to frame one side, that usually does mean it's decent narrative to decent probability to one side. But this sweep on NASDAQ, if ES also did that, I wouldn't think we were going lower, because NASDAQ looks like it took sell side right here. But again, just to reiterate, I don't have anything I'm too confident on that I'm saying this is what I'm looking for, because a lot of the times, and I've actually been able to notice this a little more since I've started live streaming my trades. I like it when I frame a narrative early and then you can see it play out, because it just gives you a whole lot more confidence behind the trade when you see the levels and you say, I want to see price do this, this, and this, and then it actually does this, this, and this. And it gives you more confidence. So that buy side is actually Friday's high for ES. So I definitely see us. We're going to have to go up there. I'd be really shocked if we didn't. You know what I could also see myself taking? So if you look on the 5-minute, we're about to print a 5-minute candle, and that's going to, without a doubt, create a fair value gap unless this thing plummets. And that's going to bring us into, so then between, so we're going to have a fair value gap there. If I was to see the 5-minute come, enter into that fair value gap, come higher, and then I would try and find, I would wait to see like a market structure shift. I'll draw this out. So we'd probably come down here. And then we would go down. No, it would look like this. We'd go down, dipping into that, and this right here would be the leg that enters that 5-minute fair value gap. And then we'd come up here, make a shift in market structure. And then what I would do is I would wait, and I'd enter in on, whoa. But hope that kind of got the point across. So it would be entering on, it would be waiting to see the entry into a 5-minute, but then, and this is all assuming that we don't take this buy side right here, and then see like a market structure shift on the 1-minute to the upside, and enter in on a 1-minute fair value gap after the 5-minute confirmation. That's assuming that we don't take this buy side. So NASDAQ, we just came through this new day opening gap and touched the consequent encroachment. So this big orange area is our weekly fair value gap for NASDAQ that we targeted last week. coming up to the consequent encroachment. I'd be interested to see how we react around that, especially after being above this high. If we started to kind of roll over, I could see downside just because that's a really significant level that it wouldn't want to get through. I went to look at that because ICT just posted on Twitter that he was taking longs up through here. And remember, don't even try and compare yourself to him, but focus on your model. So if you're at the point where you're profitable trading and you can go and take money out of the market most days, that's when you can start trying different entry techniques and just deviate from just the one model. But again, this YouTube channel, I want it to be really focused on one model trading. I want that to be, because I feel like that's what everyone overlooks. And they're trying to, use and he said this himself, and I was also guilty of this at one point, trying to do every entry model, every PD array that he teaches. And that's where a lot of people fail in the beginning. They don't find success through just one. They try and do them all. So we're at I think this is an interesting high in NASDAQ, but ES, it's not that interesting of a high. So we will continue to watch and just ask for more data until we get confident in something. Again, so at 10 o'clock is going to close. Oh, I've been on that. That was a 15-minute chart this whole time. Okay, so that narrative I just completely built out around a 5-minute candle was me thinking that this window was the 5-minute when it was actually the 15-minute, which makes a lot more sense now. That narrative doesn't stand true now that I'm looking at the real 5-minute. It could if we drop down into here. Should be this fair value gap again. It'll also be giving us the 15-minute entry. Here you can see the S&P made this high, NASDAQ didn't make that high. Nothing really happened on the news. I would be a little concerned if ES didn't take this buy side liquidity before going lower, just because, you know, there can be times where they can save stuff for later. Like, I'd feel uncomfortable trying to go short before this got ran through. Okay, so we're coming back into that 5 minute fair value gap, which is also a 1 minute fair value gap. So again, so right now what I'm thinking is this could be our AM session silver bullet. It could react off of this and go and take the SPY side. But I personally, like I said, all the things I was been talking about this whole morning, I don't want to take that right now. You do have this down close candle, this order block, but how confident are we that this is the draw on liquidity? It's hard because, like I said, on NASDAQ, these highs aren't there. NASDAQ took out these highs. So yeah, look at that. It came down right to the bottom of that order block. I wouldn't want to be going long off this. So when I built that narrative out for you guys earlier, I was kind of hoping it would put in like another swing high. And what we would be able to see is we'd be able to watch it react off the 5 minute, take that swing high, and then we'd enter off another 1 minute fair value gap. So it'd really be like a secondary entry that we'd be using as our first one, and we'd be using this as just our confirmation because right now the draw isn't too clear. Look, you had this candle close under this fair value gap. That's not good. It just looks like it's using it as an inversion right now. Came up, tapped it. It's going to go lower. But again, remember what I said about it could want to dig into this daily fair value gap, this orange area, and it just has to make a swing low to then go higher again. So this is one of those scenarios where you could outline both sides. We could be making on the 5 minute a swing low to go higher, or we could just be retracing down because, you know, the NASDAQ came up to the consequent encroachment. The NASDAQ met a level nicely, and we could be going and seeing downside. We have this giant opening range gap that might want to get filled in. So if we're not too confident, then I don't want to be in a trade. It's gambling. If we had taken this buy side, I would probably like the idea of trying to go short. But again, it's just to reiterate. I'm sorry if I'm a broken record. This is like a real-time example of why it's hard when ES and NASDAQ aren't printing the same highs and lows. So it's hard to see. You might be able to see on the 15 minute, definitely the hourly. But these highs right here from Friday morning, again, just if you weren't with me Friday, these highs on NASDAQ were up here and they were taking this liquidity. So these equal highs, this like roundedness right here, isn't here on NASDAQ. And they're not too equal, honestly. Now I'm looking at it. We do kind of have this like come up. But this high, this swing high right here on NASDAQ cleared out this. I'm going to take that off the charts. And now look, if you try to use that as an inversion to go lower, that's not too smart. In terms of the 5 minute, these candle bodies, so we do have two fair value gaps right here, but it's not like these candle bodies really respected either of them. We kind of have a little bit of a volume imbalance, but it's not even like this candle opened respecting the bottom of that volume imbalance, but this one came down and closed below it. So me personally, like, I'm not seeing too much precision right now in price delivery. I mean, even these candles, if you want to call this an order block, these candles closed below mean threshold, and that's not a high probability of an order block if you're closing candles on the below mean threshold. But yeah, it does look like this is a swing low to go higher. But also look now, we don't have a swing high between this high and this low to confirm that. So in terms of a silver bullet, I don't see any clear silver bullet this session. Remember, there are times where it is blatantly obvious. We've had one fair value gap entry since 10. It's been this. How are you going to play that? You would have got stopped out to the downside. Let's look at NASDAQ. Let's see if there's anything on NASDAQ that would have really called out. No, NASDAQ hasn't even entered a fair value gap in the 10 o'clock hour. I like how NASDAQ came perfectly to the consequent encroachment of this daily fair value gap. See, perfect. It's NASDAQ's opening range gap. I'm going to take this off just because it's blatantly not respecting it. Okay, so you do have what could be considered an entry right there. What you would do is you would target this new day opening gap high and then probably through into the opening range. I'm not too interested in taking it. And you can see this little fair value gap right here. This is also, coming up and touching the bottom of that is technically an institutional order flow entry drill. So I'm just going to call out this one. Yeah, so I'm going to call that the silver bullet. We didn't trade it, but it's okay. We don't need to. Wouldn't be a bad one, especially if we actually see the bottom of this opening range gap. That'd be a good run. Be a good run. You can see that same fair value gap on NASDAQ. Had an entry into it. Went lower. If we broke below this new day opening gap, you could see probably some kind of breaker structure, high, low, higher, high on the 5 and the 15. I think if we closed below the black box, I think we're going back to the new week opening gap. Especially after taking this low. Notice how this candle came right up to the bottom of that candle perfectly. I guess this was enough for buy side for it to take before turning over these highs. Took some highs. If we formed a fair value gap through this black box low and breaking below here, I would enter short on the retest of it, but it would have to break below this 5-minute swing low. I'd want to see NASDAQ do it too. I'd want to be closing under this black box. And I'd want it to be showing I want it to look kind of like these candles. I'd want it to be a decent amount of displacement. And depending on what the risk is, I wanna take on a small risk in term, meaning like drawdown, like if our stop was hit. Came down, maybe equal lows with this low. If it was to displace lower, I probably wouldn't enter now just because of this stagnation. I feel like it might want to retrace higher, like up into here. You can see that 5-minute candle closed. It's kind of respecting the bottom of this black box. That's why I wanted us to print through it, because then it would have looked really like it really wants to get back to this new week opening gap. Still could go. Let's see. A lot of wicks. A lot of wicks. Okay, there it goes. It's interesting. Again, I'm not trying to chase price. Just trying to see what feels comfortable. I do kind of like the idea of it coming back up into here. Be like sell one there. I don't know if it's gonna do that, but I could also see it being like boom, bah. But I think now that it's below this, we're closing a few candles below the bottom of this new day opening gap. I don't know if it'll wanna retrace that sharply back into it. I just want to leave now. I'm gonna take that off. Yeah, not terrible price this morning. I don't think it was the most clear. This entry on NASDAQ would have been a little more clear just because the NASDAQ topped right at that significant level of that daily consequent encroachment. Daily fair value gap consequent encroachment. But I also think on another day, I might have taken that. But I'd rather be more selective. Damn, I should really get a computer, like an actual computer for my trading. I have like a nice laptop, but she's getting old. From 2015, but she was nice razor. But the only problem is just the fans start pumping. But I know you guys can hear it, and that bothers me. The only real problem is the fans. Fans get loud. Yeah, so I do think probably get into this new week opening gap. We'll see if anything happens at this macro time. It's supposed to be 10:50. Let's play with our layout today. Yeah, I always hesitate when I see price like this just because there's always that chance that it comes and just like runs on these little highs and then goes lower. So whenever I see price like this, I'm always just like, I'll let it go, because like, yeah, it either usually does two things. If this is the actual draw, new week opening gap, it'll either just like eventually decide to plummet down towards it, or it'll reverse into an inefficiency, then go to it. And yeah, I never want to just like I never want to have that the chance that it just does that reverse to be running against me. What a good hourly candle. Looks like that could be a nice hourly order block. Yeah, actually, I feel like it's not gonna retrace up here, because so if this is an hourly order block, you can see it. So we're keeping a larger frame in mind with probably this sell side, this low in mind. What's gonna happen is we're gonna create the order block, and then another, and you can see it. So it's this one up close candle. Even on the 15-minute, you can see it's just 1, 2, 3, 4. These 4 candles. And even on the 5-minute, it's really just like a nice change in state delivery, just all up closed, all the way to the top. So in a bigger picture, we could come back up and like tap that, and then target this low. In terms of an entry for that, though, we don't really have too much because this is like all so messy, or there's no inefficiency right here. I would even say that what we're doing right now is us coming up and tapping the bottom of this breaker structure. You can see it on the 15-minute. Yeah, if we reverse right here, it's definitely us coming back up to hit the bottom of this breaker. I'm gonna wait for this 1050 window. Oh, I forgot to look at the dollar. What's the dollar been doing? I also didn't like, look, so the dollar's been making all morning since the London session. Came up, ran these highs, and then, and it's been making lower lows and lower highs all the way down. So that would have been so the dollar's making lower lows and lower highs all the way down, which is a little concerning for the fact that like would you want to try and take a short right now? After watching it drop like this and not continue to the new week opening gap, it was a little concerning. And the fact that the dollar, I'm seeing now, looks like it kind of wants to. Well, it's been making lower lows this whole morning. So, if the dollar's making lower lows, the indices should go higher. The fact that we rolled, it's like, is this really the draw on liquidity? Because even if you want to say this is high resistance conditions, I don't think it's not really super high resistance, but like if we consolidate like this, if it's actually going towards the draw on liquidity, it would consolidate and then break to it. It wouldn't consolidate, break, reverse back into consolidation. Make me hesitant to try and go short. And you don't even have a lot of like range. Remember, you're supposed to have at least 10 handles of probability for the silver bullet. 10 handles would mean we would have to enter, if I can get this measuring tool, we'd want to be entering like around there, above that. Remember earlier we had that sell right here. I don't know. I don't have too good a read on price this morning. Like everything is like after the fact, kind of in hindsight. Like, okay, we knew it was gonna come down here after it, broke, after this delivered. The dollar's still going lower. You can see it in the background, this yellow line. I wouldn't really want to be in a short if it does come and take this low, because this is its low of the day. And you can see on the 5-minute, right when it made that swing low and kind of retraced back up, that's when we had this down retracement. But now that we're heading back towards that low, so Probably doing nothing in this AM session. If you weren't on earlier, I've had a really good October. I'm gonna try and close out the month strong, which means I probably won't trade today or tomorrow unless something's blatantly obvious. I'm gonna make a video comparing my October and my September. I think that's gonna be a really good video. I think it's gonna give a lot of insight. September was a red month, October was a green month, and I'm gonna kind of touch on, what happened in September and how we fixed it in October. And I think it's really gonna give a lot of insight into kind of risk management, because September, my hit rate in October my win rate was great, and it wasn't bad in September either. What it was in September, it was really a risk management issue. We just had some big losses. That's what it was. I think there was 2 days where we had, I don't even want to say they were big losses. It was like 2 to 3 medium-sized losses that just kind of added up. But I'll just speak on that. And yeah, I'll be showing you guys, my journal. I'll show you the win rates, and it'll be awesome. I think it'll be a lot of insight. And I think it'll also kind of speak to the fact of, why it's important to journal. I don't like journaling. Trust me, I fought that one for a while. But even if it's just journaling in the sense of tracking your progress, just so you can measure that you're getting better. And that can look in like a lot of different ways. It can be, more green days. If you even if you're taking less trades, I think that's a win. And it helps you see, because like what you'll see in that video is my win rate for September was actually pretty high. Why it was red was because of how we managed risk. So that'll kind of give you insight, stuff like that. I can like look back on it, and I'll save it for the video, but I'm excited for that one. Cool. Definitely expecting this to roll over and take this low. If it doesn't, we're going higher. And the dollar looks like it's making these lower lows, so cool. ICT is live streaming at 11. I suggest you guys watch that. I will probably be logging off right now just to make some food before that happens, because I will also be watching that. Again, remember, a lot of high impact news this week. Be careful. It might be a rough week. We have the Fed funds rate and FOMC on Wednesday, non-farm payroll on Friday. Remember what ICT says, non-farm payroll Fridays, we should be trading just Monday, Tuesday, Wednesday morning. But just, I would say be careful, because there's a lot going on this week. If you didn't watch the beginning of this video, I think it was a good one. I compared the Monday before FOMC last month, and I showed the trade, and I have like a screenshot of the trade. And I think that screenshot kind of lends a lot of context as to why, I was just kind of watching price today. I didn't want to really try and act on anything unless it was like A plus plus, because that screenshot and that trading session was recorded on this YouTube channel. So you can also go back and watch that. But we took a setup long, and our draw on liquidity was correct, but we ended up getting stopped out because ES just came and made a lower low. It wasn't made on NASDAQ, and that entry on NASDAQ actually delivered very nicely. But since we were on ES, we got stopped out. And it happens. But that was a big losing day. And yeah, so I was coming into this week, and I saw it was high impact week, and I said, let me see how I traded last month on the Monday before Fed's funds rate, and decent sized loss day. So remember, trading is just all about not losing money, because they're once you spend enough time doing this, you'll realize that there are days where you can just, it will be easy and you can pull money out of the market. But there's a lot of days when it's not like that, and you just have to not force it when it's not like that. Because if you're not losing money, the trades will come where you make money. It's all about reducing the amount of losing days. So you can see the dollar, the yellow line in the background, is about to come and make a new low of the day. I could actually see us coming above this fair value gap, and going above it. I wonder, depending on how we trade that, actually, I might be interested how we come up above it close. I feel like lately I've been really bringing home this setup where we consolidate, break above, and I use an inversion. That's been fun lately. Let's see, maybe we'll do that right here. I would like it because we'd be above the new day opening gap. We'd be breaking above this fair value gap using as an inversion. We'd be coming out of the opening range gap. I'd do it if the risk, the drawdown was small. See how it plans out. Okay, we did get the close above it. Slightly, ever so slightly. Came back down. Might wait on that. I like it, but I think the stop would have to be actually pretty wide for before the trade is considered invalid, and I just don't want to take on that risk because you have this, it's looking like a 5-minute order block. I could see it coming down all the way to here, and I don't want to take on that much risk. It might not though, might not. But again, you don't want to, and I'm still guilty of this a lot. You don't want to place your, if you see, say you enter a trade, you want to place your stop below something where it's like, if it goes to this point, my hypothesis is invalid. So I would say that'd have to be like down here. Looks like the dollar's taking that low. Yeah, but as you can see, I was kind of wrong a few times today. I really thought we were going to come up and hit this daily fair value gap before we turned. We didn't. I said we were going to go back to this new week opening gap. We didn't. Yeah, so just staying on the sidelines. You can see on the 5-minute it shows it while we turned right at the daily consequent encroachment of that wick that we have on the higher time frame. Okay, now I'm logging off. Enjoy your day, guys. I will be on tomorrow.